What's up, everybody? Today is Friday, February 2nd, already a month gone. This week is Finding Your Way, episode 9. We're almost done. We only have like 3 or 4 more weeks, and Luna and Dell will be doing live trading or hopefully doing a prop firm a challenge or something. I don't know. But hopefully they'll continue going consistently and hitting home runs hopefully soon. But this week we'll be talking about market psychology and trading psychology. Um, some traders may think that there's no such thing as trader psychology. I'm not. I'm not on the same boat as them. I think psychology coming in as a normal person into trading, it's way different because you have to kind of think of the inverse. Um, because a normal person would think like, hey, good jobs, right? Good job. A lot of jobs for the market is good for the market, but right now in the situation that we're in, it's not really good for the market. Because we want interest rate to come down or we want inflation to come down, right? So if there's a lot of work, that means that people have money to spend, and if the more they spend, that means that it keeps demand high. So there's no way to control the inflation if people still have money to go spend. So yeah, it's kind of bad to think that we need high unemployment rate. Uh, and you don't want people to lose, their job. That's their life. That's their life right there. That's how they feed their kids or put food on the table. Um, so it's kind of cruel to think that we want higher unemployment, but hey, that's just part of the game and the way the system is rigged. So that being said, this week there was a bunch of data coming out. There was PMI, ISM, uh, Powell was gonna release the FOMC. So in those days, you always have to think opposite of what the news is telling you and what the market is telling you. You always gotta think that the market is setting up. It's setting up the play for the following day. So if FOMC is coming into play, um, then you know the market's gonna set it up for the next for that day. Not only that, but this week was gone week. So it kind of lined up. So the gone day was the 31st, right? And the gone day, the way that I've researched it was wait for the gone day candle to close. So it was on the 31st, so it was on this red candle, right? And that's why it's a 1 to 2 day buffer on the gone day candle. So the gone day candle closes, and then you wait for the next candle, the next day candle to either break above or below the body. And look, it didn't break below. So what do you expect? If it didn't break below the body, you would expect for it to go up the next couple of days. And that's exactly what it did. It caused this pop to go up. So the next gone day will be in 22 days from now, 22 calendar days, not 22 trading days. So that caused that day. But it sets up. So you set it up. Look at where it comes down to this doji. The level came right down to this doji. And as long as it holds that doji, that doji is gonna be it's gonna be the over under. But always think the opposite of when the market of what the market is doing. So if data is gonna come out the following day, if that is gonna come out the following day, that means that the current day you're in, they're gonna run it up. They're gonna run it up so they can dump it for data. They'll dump it for data, and then market will digest it. Once market digests it, it will continue on with the move going in that direction, or it's going to reverse after digestion. And that's what happened this week on Wednesday. When was data? When did that was yesterday, right? Thursday?
Yeah. Yeah, 2 p.m.
So what was that? What's right here? 2 p.m. 2 p.m. your time? So
Yeah.
11 my time?
Yeah.
Yeah, so right here.
Mhm.
So see what I mean? So right before data came out, right here at 11:45 or 11, they dumped it and they were dumping it, right? They were dumping it right before data came out, right here around this time frame. So what did I just say? They're setting it up for the play. So if they're dumping it right before data, that means they're gonna pop it when data comes out. So they popped it, and then market started digesting it. Not only was there a 666 tag there, but market digested. What is this? A 15-minute? Yeah. So the 15-minute, it usually does it 15 minutes. We look at the 5-minute chart. Should be right here on this one, right here. Nah, so that's the first 11. Doesn't really show anything. Dang it. Anywho, they'll dump it. They'll right before the data comes out. They'll pop it, and then it'll digest it, and then it's either going to continue in that direction. But the moving average is right here, since it's 666 is a resistance. You would you would think to yourself that that would be the rejection point. Not only that, there's liquidity right here. There's a lot of sellers right here in this area. So you're already thinking yourself the most that it can pop is that. Of course, there's days where it can just smash through, but just pay attention. If they're running it down right before data, pay attention to, and this could be a 5-minute candle where it pops all the way up and it gets sucked right back down. And you're like, well, Semper said that it's gonna pop, and then but it can happen in an instant, especially when it's big data like PMI or interest rates, any of the big data. It's gonna cause big candles either way, and it can be pop up 20 points or pop up 60 points on NQ and then shoot right back down or get sucked right back down and create a big wick. But then wait 15 minutes and then the real move is gonna uncover itself. And it always does the opposite. If they're gonna run it up, if they're gonna run it up right before data, then Powell's gonna say something or do or react to something that's gonna cause a knee jerk reaction the other way. But you guys have any questions? I share my screen. Should be sharing my screen, right? Yeah. Cool. Well, did you guys, Luna, Dell, did you guys trade through data? Did you guys wait through data? Or did you guys not even play at all?
I don't trade through data.
Good. I highly don't recommend it, especially if you're a newbie, is to trade through data, but I do recommend that you pay attention just so you get used to um, trading through data, or at least waiting until data comes out and then trade it. That's the way that Brandon initially taught us was like, hey, let's let's wait 5 to 15 minutes after data comes out. So like that we can get a better sense of direction of where price action might go to.
One thing I
Uh,
noticed though with data is, let's say if it goes sharply down at opening uh, or during data time, normally it comes back to the level where it dropped in general. Not all the time, but somehow it does come back up. Does that make sense?
yeah, yeah, and that's usually what they do. Like when market opens, just keep paying attention because they'll run it up, right? They'll run it up all day until data, right? Until maybe like 20, 30 minutes before data comes out, and then they'll start going sideways. You'll see the market fucking slow down. Like the candles won't move as good up and down. They'll just stick at like at a certain tick for like 45 seconds of the candle if you're using the 1 minute chart, or a couple of minutes of the 5 minute chart. It'll just stay in that and it'll just look so slow. And once you see the market slowing down, start paying attention at the volume, at the MACD and at the RSI. What's the RSI telling you? Because usually the RSI will tell you if it's strong to go up or if it's creating lower highs to go down. You'll start pay attention to the divergence in RSI when they slow the market down, and then keep your eye on it because it's going to uncover itself before the big move happens. Before the big move happens, it's going to either be creating higher lows from the bottom, but be careful because if the RSI is below the 50 RSI and is creating higher lows, there is a chance that it could resist against the 50 RSI. And those are just the little nuances you guys have to pay attention to. Is it gonna squeeze up, or is it gonna squeeze, or is it gonna dump down? And that's where I kind of started to slowly pay attention to it. And then I hear Brandon say, hey, this next 5 minute candle, or hey, this next candle is going to tell us if it's going to squeeze or if it's going to fail. And then I pay attention to it, see how it opens. Did it open flat? Did it stay like flat for a few seconds, or maybe like a minute of the 5 minute candle? Or did it jump up or did it dump down? And in those two moves, if it jumped up, did it get sucked right back down immediately? Or did it stay up a little bit? Or did it dump down and it got sucked up immediately? Um, just so you guys can see, okay, buyers are coming in, sellers are coming in, or the buyers are accumulating, or the sellers are accumulating, right? Because if it opens up green, if the candle opens up green, it usually says we want this next candle to open up green. That means that he wants it to open and pop up and be green for a little bit instead of hey dump down a few points and get sucked back up, which is also it's not a bad thing because if it gets sucked up right away, then you know the buyers are coming in and buying it up right away. But as of lately, the biggest thing that's helped me, and I thank Dell and the ICT model for that, is looking at price action to the left. Always look at price action to the left because if you see big wicks, you know there's liquidity there. I always notice like when there's a big candle, like this big red candle, right? All this price action. Why did it shoot down? Why did it shoot down? Well, first off, there's a moving average resistance there, but there's also this liquidity right here. So you know sellers were right there. You see this big red candle? Always look to the left. If there's a big green candle going up, or if there's a big red candle going down, um, me, there's gonna be buyers or sellers there. Like at this level right here, right? This little two green candles right here, you know that there's gonna be buyers right here waiting. So whenever we come to it, to that level over here, sometime next week, that there's gonna be buyers right there. Same with the sellers. There's a big red bar right here with the big wick. You know there's sellers right here. Whoa, what happened right here? Look, this green candle got rejected. Why? Because there's a resistance and there were sellers right there. And then you see this big green candle go up. So you know there's buyers because there's buyers right here in this zone. So you know that zone right there is a pocket of buyers and a pocket of sellers. But look at, you know that if you get over this level, and this is how I call out my levels. So if you know that if you get over this level right here, I kind of look for I look at this and then I look for dojis. So there's a doji right there. So right away I would have marked off a line right there. That's my over under level. Not only that, but we got confirmation of strength above the 666. You see that? So it came down, hit the 666, confirmed it for strength. Remember, because we always wanted to smash through that level. Look at that candle, strong candle, smashed through the 666, went up, came back, confirmed it. And what you want to look for is to get over this blue level, this doji or this wicks. And you know that it's going to squeeze or that should squeeze. Not only that, you see nothing but green, no red volume beats at all. Look at the volume. Volume says it all. The TTM wave was way smaller than this wave. So you know that buyers are still in control. See right here? Right here, this TTM wave compared to this one should have told you buyers are in control. Any questions? Um, the first signal, right? Because it bases. The first signal, okay, higher lows on RSI. So you know it's gaining strength, right? Through this red wave, you know it's gaining strength. And then you're like, okay, buyers are taking control. Maybe it didn't beat out this wave. So sellers are technically still in control. RSI is bearish because it's below the 50 RSI. MACD at that point was curving down, so it was kind of bearish and it was below the zero line and the histogram was going down. But the TTM tells you right here that buyers took control. Once you see this red wave right here, look at this red wave, smaller than this one. So you know buyers are taking control. Not complete control yet, but then you see this green wave beat out this wave, so you know the buyers have control now over here by this area. And then you have MACD that's bullish. It's on the top side of the zero line. And then the RSI has now become bullish because it's cracked a couple times, but it's holding above. Holding above. Right here, kind of wishy-washy, but you're still recovered right away. The MACD was still bullish right here, above the zero line. And this right here is what you call RSI reset. Right here, from here to here, where it goes all the way from the top side, from over hot to over cool. It's a reset. Look at where buyers. Remember, always look to the left. There's liquidity right here. See that big wick? There was liquidity right there. Created a doji. Could have gotten up. And it tagged the 666 again. Cool. Any questions? Does anyone got anything to add on market psychology or anything?
No, it looks good. You covered it. You covered a lot. I did have a question, a general question, sort of going back to the beginning. You're talking about how there is in general a run up the day before data. Is there ever a sell down the day before data?
Yeah.
So,
And that's what I'm saying. Like, pay attention to the market to see, okay, is it dumping it all day? Because then that's going to give you an inclination of, okay, if they're running it down all day, then data is going to cause the pop, right?
yeah.
If they're running it down, if they're pushing it up all day, then they might dump it after hours. And this is where coming in after hours kind of comes into play. So this is what usually happens is they'll run it up after hours or they'll run it up during the market open. They'll run it up all day. They'll dump it a little bit. They'll dump it. They'll do like the half candle retrace. They'll do that. And then pay attention. Once it reaches the 50% or the half candle retrace, then you start paying attention to, okay, are they going to keep dumping it down right before data or are they going to pop it up? Right? Because the day before is kind of giving you a clue, right? And then the day of data, what are they doing? Are they continuing to run it down or are they going to push it up? Because the market already knows, right? And then the retail traders or the retail traders think they know. So that causes a move. Like trading during data week after hours is really good. Is really good because this week, 2 days, I hit my daily goal before even market open. Before even market open, I was already done. Because during data days, the moves happen before the move actually happens. Because they're gonna set it up for the move. They're gonna set it up for that data. So like I said, if they run it up all day during market open the day before the previous, then during after hours, they might dump it. And then it's gonna start to set up between midnight my time and 3 a.m. It's gonna start to set up because data comes out at 5:30 my time, right? So
I dump it down to something like the half candle retrace of that previous, and that would be like an engulfing green candle, the one that they ran up.
what was that?
Um, it would sell down to a half candle during after hours.
Hmm.
And that because that previous day would be like an engulfing green, a big green candle.
Yeah, yeah. The bigger the body, like if it's a big green candle, and and the biggest thing is if where does price action open? Does price action open above the candle, which leaves a gap, right? It creates a gap. Sometimes it's not a gap because it was a wick, but if it opens up outside the body of the previous day with futures, usually that gap closes within the first 2 to 3 hours, if not even the first 30 minutes. It's rare for gaps on futures. It's rare. Um, so if it opens up out like above yesterday's candle and there's a gap, then when the first 3 hours, look for that gap to close. Once that gap closes, it's either gonna continue running up or it's gonna pull back to the possibly the golden pocket. Once it gets to the golden pocket, pay attention to where in relation to the data release. Know what I'm saying? So if they run it up the day before and then data release is like 30 minutes away, and it's coming down a half candle retrace. What do you think is going to happen?
Yeah, I think it's gonna hold at a half candle and go back up.
Yep. It might pop it, right? It's going to pop it for data because it hit the half candle retrace, or it hit a moving average, a daily moving average, or a significant level, right? It's going to hit that level, and it's most likely going to pop. And then you wait for market to digest, and then it can continue going down. But just pay attention to where price action is in relation to when they're going to release data. Because let's say another example is they ran it up the same day, right? Same kind of play, same kind of price action. They ran it up the previous day, and this time price action it hit the 50% retrace and it popped. And then right before data, they're gonna dump it because why? Because it might create a lower high, and then it might smash through the half candle retrace. Does that make sense?
That one lost me a bit. Can you run through that one again?
So let's just, for example, it's not at significant level, right?
Right.
It already hit the significant level right before data comes out. Then price action might they might still dump it, but you have to pay attention. You have to ask yourself, okay, is right here, okay, I already hit the half candle retrace, right? Like 15 minutes ago, it hit the half candle retrace. I'm like 2 minutes away from data release.
Right.
Where is price action? Okay, it looks like long term it can create a lower high, but in the current term it's in the long trend. So within the last 15 minutes it's going up, right? It's going up because it already hit the half candle retrace or it hit a significant level. And then they release data. When they release data, they can they can dump it, right? They'll dump it to create a lower high, and then they won't dump it that much down to the half candle retrace again. They'll leave it a little bit higher to create a higher low and then keep running it up.
Mm-hmm.
That can happen.
Yeah.
That's why I'm saying keep an eye as to where price action is 5 minutes before data release. That's usually when it'll tell you the tall tale sign. Is it gonna they're gonna dump it or they're gonna squeeze it?
Something surprising happened this morning. I didn't play it because it didn't look quite right, but I was still surprised anyways. If you look at ES at 5:30 your time, there was a data release. Um, it was the one that really plunged it down to
Yeah, right here.
yeah, absolutely. So it was like it was basing it was forming a price action base right on the 666. And I was like, okay, this is probably gonna do a nice pop, you know, from the
Oh, right
six.
here. You thought it was gonna pop.
Yeah, I thought it was gonna pop. Yeah. And I didn't play it. Even though the day before I got a really good 666 data play. This one here, I don't know. Something was telling me to stay away from it, but I was still expecting it to go up. Uh, so that one surprised me. I'm just putting that out there. Would that one not have been a surprise to you?
The only reason why it wouldn't have been a surprise to me
Hmm.
is because right away I see RSI almost confirm weakness right here, right?
Let's see. Yeah. Oh, under the 50. Yeah.
So that would have been a tall tale sign right there.
Yeah. It's funny. One of
But
our one of our members caught his A plus setup around there,
yeah, that's easy. This is his A plus setup, the 1050 cross right here.
and that
And
dude
then
threw data today. He did well.
yeah, and that's another thing is look at where price action is in relation to the 50 SMA.
Uh-huh.
Look at where price action is on the 5 minute. Usually I use a 5 minute.
Right.
So today at 5:30, right?
By the way, I just gotta say out loud, I was excited for Easy today because I don't know. He did a great job because he spotted his setup, and he also we'll see if he was looking at the same things you were looking at, but he was also able to hold through data and make a really good play.
This today? Oh, no. This is today. Right here.
Yeah, that's the one we're looking at. Yeah, it's it. But you were saying that on the 1 minute, you look for price action, its relationship to the 50.
Yep.
Um, so right here, price action is under the 50 as
This
data.
is a 5 minute, yeah, as data is being released.
Yeah.
But as data is being released here, and this can be dangerous, and this is why I don't highly recommend that you guys don't trade. But just pay attention where price action is in relation to data, right? Because look at they switched sideways. It was going up the day before.
Hmm.
See, the whole day before it was going up.
Yeah.
And then they go sideways. And then about midnight right here. See midnight?
Yeah.
Midnight it starts to pick up. Remember what I said? Between midnight and 3 a.m. it starts to set up. So look at right here, midnight. What are they doing? Now they start to run it up, run it up, run it up, run it up. You can kind of barely see, but I don't know why it's not letting me stretch it out. But it's creating higher low, higher low, higher low, higher low, right? The whole time they're running it up right before data. So what does that tell you? Remember I said, think of the inverse. Think of the opposite of what the fucking price action's doing and what price action is in relation to the data release, right? So they run it up the whole, like almost the whole night. Even remember I said the previous day they run it up. They run it up,
Hmm.
and during after hours, depending on how it opens up, they'll either go sideways or run it up or continue running it up. And if they continue running it up right before data release, that tells me, okay, they're gonna dump it for data. Okay, so then what did I say? The last 5 to 10, 15 minutes, start paying attention to where price action is in relation to data release. So you kind of get a top, and then you get a lower high right here, and then 5 minutes before price action, all of a sudden, is holding below the 50 SMA. That's another tip. What? Where is price action in relation to where the 50 SMA is? Is it
Your
below
50 is
or
that your 50 is that yellow right there, right?
yeah, that yellow dotted line right here.
All right, and it's holding below.
Yeah, right here. It broke below
Yeah.
on the 5 minute. On the 1 minute, it was the same. It
It
was
was
way
already
below.
below.
It
Yeah.
was way below.
So if it's below, then after the data release, it's maybe likely to continue going lower.
Yes.
Yeah. Yeah, I mean that's really very clear too, since it was apparent on both time frames. So
When
once
they
it,
both line up, you want them to both line up, right? You don't want
yeah,
you don't want the 1 minute to be above the 50 SMA and the 5 minute to be below it.
that's what you
Even though technically the longer time frame is more stronger
uh-huh.
than the lower time frame, it, it can pop up on the 1 minute, and then on the 5 minute it's gonna create that wick, right? It would have created a wick like right here. It would have done this. It would have created a wick right there. It popped up on the 1 minute because it was bullish. It was above the 50 SMA on the 1 minute, right? So it's gonna pop up like 2 or 3 candles, maybe even just one candle, and then get sucked right back down. And it'll create that wick right there, and then it still dumps because the 5 minute was weak. It was below the 50 SMA. But pay attention. What did I say? Where price action is, what are they doing the previous day? What are they doing after hours? Where's price action? 15 minutes before data release, and then 5 minutes before data release, where is price action in relation to the 50 SMA? And you can look at RSI too,
Yeah.
right? MACD might not be that good, but RSI will tell you. And then here's Easy's grade A setup. Here's the 50 RSI. Here's the 50 SMA is below it. You could get in and write it down. But write down those questions that I just gave you, the 4 questions. You know, what are they doing the day before? Are they running it up? And this is only for data. This is not like every day after hours. This is like FOMC week, you know, where they release job claims, data, interest rates, or ISM, PMI, consumer sentiment, all that stuff. Use this information for those days and just pay attention. So you're going to ask yourself, what are they doing the day before? What are they doing after hours? Where's price action 15 minutes? What are they doing to price action 15 minutes before data release? And then the fourth question is, where is price action in relation to the 50 SMA? If you want to throw in, does the 1 minute line up with the 5 minute? Just like we looked at right now, right? It was way below it on the 1 minute, right? It was below 50 SMA. And look, not even that. It created a freaking lower high right here. And then a third lower high
Yeah.
right before data.
Yeah. Easy posted a screenshot of his trade, and I was like, damn, that's all right, because that's easy setup right there. Great A. You also mentioned a little while ago the Gone day. That should probably also be taken into a factor as well if that coincides with data release.
Yep. Yeah, exactly. Gone day. So 22 days from the 31st will be the next cycle. Pay attention. Remember, wait for the gone day candle to close, and then the next 2 days is when the move is going to happen. It could be the 2 days before, or it could be the 2 days after. But start paying attention. Somebody
Mm.
asked something? Yep. Yeah, that's the one, Toad. That fair value gap 3.0. With that fair value gap, there are some settings that you can change. It's either the pierce through or on bar close. So for the fair value gap, that fair value gap would either it'll close. So the way it closes on mine is once a bar closes above that zone. So see this red fair value gap? This candle closed above it, so it closed that one. But yeah, that's the one. If you have any questions, just shoot me a message and I'll help you. But let's jump into it. Let's recap some trades, see what you got, bud. Hopefully this week went well. Dell, you there?
Yep, I'm here. Sorry, I was hitting the wrong computer. Yeah, this week was good. No complaints. Because of data, I wanted to test some things out, and it worked really well. Caught a couple of good plays. Let me share my screen. So no complaints, and
Awesome.
the fair value gap really, like you said, that BPR really helps out. Because this week I wanted to try working on fishing orders or
Mhm.
trying to determine where the bounce might happen on a if it's dropping or if anything, and using depending on how the fair value gap is, I can kind of have a inkling of like, okay, it may bounce here for like a scalp or it may bounce here for like a definite pullback. And probably can get like a 30 point or something like that.
Yeah. Awesome.
So
Yeah, you've been killing it, bud. I definitely have seen your confidence grow. Um, and just keep doing what you're doing.
definitely. Let me know if you guys can see my screen.
We gotcha.
Okay, so the 30th, I only took one trade because I had to, with the 29th, that was a Monday, because I had to pick up the kid from school. She was sick, but this one was early morning, and I wanted to try to start trading early morning just to catch what I can.
Yep.
So before I even got into the trade, I looked left, I marked off this level here because for me gave me the confidence, like, okay, it's gonna either not bounce or do a lower high and continue. So this was, even though I did see the fair value gap, that's what I waited for, but I got in on the top fair value gap, but I figured like, okay, if it may come down to bounce, I'll probably add another contract here. As you can see though, it never did bounce, it just kept going. So I closed out from here, closed everything out, and I was actually done for the day. Once the kid got home, there was no way to even try to get into a trade, so I left it alone. The next day actually was basically the same thing, early morning trade. Got in, like I actually got in before market open, and market kind of gave me this bounce. One thing I noticed definitely on a bounce, depending on the size of the fair value gap,
Uh-huh.
would give a bounce, like would give you a certain bounce, but I wasn't too sure. So I did a fib. So I fibbed out and, I saw it retrace back to the 50, which was like right here and a fair value gap. So I'm like, okay. Then the third confirmation for me was like the third confirmation was I see the trend. And then after that, bouncing off the RSI, creating a divergence right here. So I'm like, okay, it bounced. I got in right here, but then I put a stop loss because again, this is the first time trying it. Didn't want to get too crazy with it.
Uh-huh.
And as it was moving, because it was before the market opened, so I got skeptical. So I just placed my stop loss real close. I mean, stop loss real close, profit take even closer, just in case, closeout was going to be 50 SMA, and market started opening, it started moving up slowly, and targets were hit. So I didn't stop out. So that was good. That was a good trade. And as second target hit, so that was basically it.
Hey,
Um,
how are you deciding on your stop losses? I
on
noticed that you
Wix,
haven't really got stopped out a lot that or that often. That
no,
I
it's
mean, you
basically on Wix, all on Wix. Like you said, look at the Wix, and that will determine. So what ends up happening is that's why I don't even wait to get in until bottom of the trade. Like this one, I saw the bounce. That's where I confirm. I'm like, okay, even if I'm unsure, I'll put it real close, depending on how am I trying to determine the play. Like, what do I have? Like, if this was above the trend, I would use the trend for my stop loss. If it's like halfway, or if I see a BPR, that will be
yeah.
where my stop loss is. So
Okay.
it's never the same, but it's always, at least I'm not going by points. I'm going by, like, I can't say by more indicators basically. Is a wick?
Yeah.
Where's the wick at? So that's how I determine profit take or stop loss.
Okay. Cool.
So with this one, this is the same trade. Like I said, second target was hit because I moved it right below the 50. Caught that play. That was great. Couldn't really, I think this was when what was it? We had a data play.
Uh-huh.
So this is where I wanted to test out the bounce theory. Like, okay, so I watched the bounce from here, and I saw it bounced off the fair value gap. And that's when I was like, yo, I would wish I could get into a fishing one just to have it, because I didn't have the confidence it would stop here or
Yeah.
continue because I saw the red. So I just didn't want to take a chance. But then this is where it created the fair value gap. So, and I remember I told you I had fibs out. It bounced off the 100. And I'm like, oh, I could have gotten in here to probably get it back down to the fair value. But I was like, no, you know what? Let me just take it easy. Let me just watch to see what happens. Then this bounce happened. and I saw the fair value gap created here. I actually set the fishing order, and next thing I know, when I first placed the fishing order, it actually I did have the stop over down here because I was already green, so I was able to like say, okay, I'm willing to risk a little just to see what ends up happening.
Yep.
And because the 161 was here, and basically it shot up and sold it right before the close of the fair value gap on this play.
Where did you stop out right here on this one?
This one was actually right. I didn't have it, it was mental, but it was at the 161. I would have added more here. I would have probably kept adding until this because of the trend line.
Did it tag? It did tag the 161, huh?
No, it didn't, because I got in over here.
No,
I
but
waited
like right there, didn't it tag it? The 161?
right
Right
here.
there. Yeah.
No, but yeah, but I got in after.
No, I
I
know. But
oh,
that's
you
what
talk yeah,
usually
it's
what usually
yeah.
happens is it'll hit the 161 or it'll shy the 161 and then it will go up to the 100, back to the 100 and then come back down and smash through the 161.
Yeah, but
That's
and
why.
that's why when I saw the 100, when it bounced here and it created the trend line,
Yeah.
I wanted to wait. I waited. Then when I saw this fair value gap, that's why I set this fishing order here. And I was like, all
Yep.
right, my stop out would be at the 161 because this is twice. I'm thinking the third time might just break it and fall through.
Yeah.
So
No.
that's when I caught it here and I was able to catch the play. I was looking to stop out at the 100, but because of the momentum, I gave it a shot. If it probably touched back to 50, like went back to the 50, I would have got out.
Yeah. No, a lot of I've been seeing a lot of the falling wedge breakout. So right here like this. I've been seeing that a lot lately. Like more often. Not saying that it's gonna go like this and go up, but I've seen this breakout a lot of times, whether it breaks out, it hits the 50 SMA and then continues going down, or if it does this and it continues going up. I've seen both of those happen a lot, but the falling wedge is the falling wedge and the rising wedge have happened a lot in the last month or so. So that could be like an additional confirmation as well, because I mean it lines up with they would have entered right here somewhere, but it see like when you see the falling wedge, you know that
Mhm.
once it breaks out of that wedge, that it might squeeze. And that's what I'm saying is like I would have probably called out the play where, hey, if it holds this fair value gap and it holds this or it breaks above this wedge, then it's probably gonna squeeze.
Okay.
No, just pay attention. Like you'll see this or you'll see it the inverse. See right here, like or I would have done like this.
Can you a little bit explain about the falling wedge? What is the pattern?
So the falling wedge is lower high, lower high, lower high, where they kind of see how there's one right here, one right
Right.
there, and then it'll break out. The ideal breakout, what you want it to be, the ideal one is you want it to do this, or the way that we do it is we want it to break out, confirm right here, create another higher low, right here somewhere, and then go up. But over here, you got the rising wedge. I wish I could draw a straight line, but anyways, your eyes will start to appeal. See where it just dumps once it breaks that level? So this is a rising wedge. Sometimes you'll see them where they're like exactly the same in both directions. So like a channel up and then a
Why
channel.
would it break at that particular point though? I think this is what's data, wasn't it? That breakout.
Yeah.
That's 2 o'clock. Yeah.
Oh, it's 4:30. Oh no, yeah, it's
Yeah.
2:30. I don't know.
Two.
Was that data?
Yeah, it was
That's
data.
data. Yeah, that's
Data
data.
came out, and like you said, wait 15 minutes after. So that's why I got into the trade. I watched the whole trade played out. That's why I didn't really want to get in because it just dropped all the way down to the fair value gap. Then it bounced like dramatically within 15 minutes back to the 100. Then it dropped dramatically again, even though it was like within like 10 minutes. I'm
Yeah.
like, yeah, this is crazy. Like, so not really until, when you put things into the chat, like, hey, this is what might end up happening. That's how I'm trying to configure my brain to talk to myself to figure out.
Yeah.
So when it dropped, I'm like, all right, it bounced. Let's see how high it goes. I didn't even think about that. Let's see how high it goes, and then I'll play it from there. Maybe I can catch the short.
Yep.
But then because it already created the fair value gap, when it ran halfway and it bounced at the 100, I thought about getting in, but then I'm like, this is data. It's funny because everything happens for a reason. I forgot who posted. If you trade within this time, you need Gamblers Anonymous.
Yep.
So that stuck into my head. So I'm like, yeah, it's not even 15 minutes yet. You know what? Let me just wait. They're right. This would be considered gambling right now. I forgot was it Toad who posted that or somebody or Pete? I'm not sure. So yeah, but that just hit me like, be patient, wait, you see, even though the moves are happening, just wait. So after when it bounced up again to the 100 and bounced back down the second time to the 161, that's what I was like. When I saw it bounced at the 100 again, I may be able to catch a short.
Yeah.
But then I saw the fair value gap, and then like you said, the grade A setup was all right. If it goes back to the red fair value gap, I'll play the short. But if it doesn't and it touches back to green fair value gap, I will go long. But I will have my stop just in case. So this is the whole thought process. And that's when I saw it didn't actually hit the fair value gap or close to the 100 and it bounced back off the green fair value gap. That's when I decided to come in.
Yep.
And
Awesome.
that was that play for Tuesday. Wednesday, I think, was because of after data, I kind of switched the time frame. This was early morning, big push. This is before market opened. I caught this trade. I wanted to catch it like a quick scalp to the 666, which I was able to tag it and just left the trade closed. I took one contract out that time because it was early morning. I'm not used to trading early mornings.
Mm-hmm.
So when the market was acting the way it was, I switched over to the 30-minute because I couldn't really read anything.
Yeah.
So when I switched to the 30-minute, I saw this red fair value gap, and then I had the PLC here.
Yep.
The only reason, since the wicks alone, the only reason why I got in here because I wanted the red fair value gap to be my stop. Like I didn't want to take a risk for it bounce. So I jumped into the play off of momentum. I had a set of fishing order, it hit, and I was able to take the play all the way down to the bottom green of this wick. Because I figured that's probably where it'll probably get shot right back up. Because like you said, once you see the wick, those are buyers coming in. So that's how I played it.
Yeah. Awesome. Always look to the left. And if you see the big green or big red candle, there's gonna be just like right here. There's gonna be rejection. And look,
Yeah.
it was a rejection just because there's a big red candle. So there's sellers right here just waiting to pounce on the freaking buyers. And then you see this red volume right here. So you know that if it goes below that level, it's gonna come to this level first. You can't just be, and this is where some traders get ahead of themselves, right? And they're like, well, fuck it. It fucking bounced and it went. Let's say I was long on this, right?
Mhm.
And you have to take it in stages. So yes, it can come down to here, but first it has to make it through here, through this area. So in this area, price action can come down, maybe do this, and then go down. But you know that there's gonna be a speed bump in that area. Look, it fucking did it. And you have to think, look at like Toad and Ty, like look at these volumes. There's gonna be pops and dumps between those areas because there's volume profiles there, right? But the way that we use confirmation is break through that volume profile. So if we put this volume profile right here all the way across, look at the candle that broke through it. It smashed through it. So what do you wait for? For that volume profile to get confirmed right here to continue going down to the next volume profile or volume area lows or whatever it is. But you always have to look to the left and then see if there's any profiles because you're like, fuck, I put my stop right there at the volume profile and you put it right here. And next you know, you get stopped out and then it reverses against you. You're like, fuck. But if you put your, if you can tolerate, if you can tolerate a bigger stop, then put it right here. If not, don't even fucking get in the trade until you're closer to that stop. Because if you can't get in right here and put your stop down here, wouldn't it be logical to put your entry down closer to your stop? Yeah, it might be tighter, but shit, you're not gonna lose fucking or blow up your account. Because you might be putting your stop at a reversal point, whether it's volume area lows, whether it's one of these limit walls. If you're putting your stop at these limit walls, then you're setting yourself up for a potential reversal. You're like, fuck, why did I put it there? Then maybe I'll put it like 2 or 3 ticks below that area. And that's why I like Tradeovate, because Tradeovate, you'll get one single bar, you put your cursor on there, and you just fucking, okay, my stop is right there. If that's how much you can tolerate. Right? If not, you can put your stop down here. It's gonna go down there, shy your stop, and then reverse. But man, you've been killing it, like I said. And these areas, these structures always, or these dojis in these structures, if you see a doji in those structures, line that shit out with one of these volume profiles, and then make that your over under level. But cool, cool trade, dude. Usai.
I was on mute, sorry. Yeah, but beyond that, February's trade was basically the same. Caught some good moves, some shorts, some longs. Yeah. This one was Thursday. Waited for the whole morning to go through, waited till 9:30. I caught this off the
BPR.
BTR. Yeah, and because that's why I started halfway right where the green fair value gap was, and I was actually able to catch that down to the level. Somebody needs some vitamin C.
Somebody having a sneeze attack. Had to mute you.
Don't need some elderberries. By the way, that stuff is good. No hate. That stuff is good.
No, it is. It is. I'm more of a vitamin C type of person.
Oh, for sure.
But that was like my first trade. Worked out. Second trade was on a 30-minute again, because I couldn't really read the chart. Caught this fair value gap actually to target, but I think this play, was it this play? There was a play I actually caught 3 times because it's the same move over and over. So I basically scalped in between.
Would you have preferred to just stayed in than, be
No,
one
because
huge trade instead of
it
3
worked
trades?
out. I mean, I would have, but because the way it worked out, this is what ended up happening. I caught this trade first, and then after, when it came back down, I switched to the 1 minute to get a better look. So basically what ended up happening was it bounced off this long drop. I had a big green fair value with the small, so I kind of used that as my entry, just to see like my fishing motor, because I placed the fishing motor there because I wanted to start using fishing motors. So I placed one here, and I actually had one here after when I saw the bounce. Like, you know what, just in case if it bounced off of here and comes back, I can get another contract. So what ended up happening, it did hit, it went back up and it came back down, so I placed another one. But it never actually touched this one, because I already got in 2 contracts. It closed one out right when it hit the top. So then right when it hit the top, I actually closed both out because I wasn't sure what was ended up happening, so I just ended up closing both out on this trade. This is the one I caught 3 times, so then it bounced back down, so I got back in again. Right when I got back in, it's because there was that divergence right here. So I'm like, this is not gonna go lower than this. And what gave me like support confidence was this big green red fair value. Then this little mini green, I'm like, there's no way it's gonna be able to bust through this, because thinking differently as far as the BPR,
Uh-huh.
these were all small wicks. And it was something that Brandon said. Brandon was saying when he started talking about fair value gap that week. And I even texted you like, yo, something just clicked the light bulb.
Yeah, I was about to ask
So
you about that.
yeah, so what ends up happening, he's like, well, it's gonna bounce off this fair value gap and probably go back up to this one. But you see how, and he mentioned how big the red value gaps are makes a difference. So when this dropped and it created all these red fair value gaps, and I'm like, this is big green one here, it has to bounce here to in order to try to close these out. Like I guess
Yeah.
it's like regular gap plays.
Hmm.
That's what clicked in my head, regular gap plays. So I
Yeah,
figured
the
it might
first tag never closes.
correct. So right when it bounced back here and it created the red fair value gap, normally I wouldn't get into this trade because of this, but I figured, you know what, this is strength right here. It has to be able to bounce off and go back in. That's why with 3 contracts, I just decided to put one close here just in case, because I wasn't too sure. But if it had broke and went beyond here, because I would have my hard close stop under this line. Hold on a second. Hold on a second, guys. Sorry, the kid came back from school.
All good.
Um, so I caught it, closed one here, which closed the fair value gap. So I had 2, and I just actually closed both of them right here. So it worked out. I do get what you're saying. I don't know. Is it because of what Brandon said that gave me the confidence to play it? I didn't want to go all the way back down to my starting point, because I had all this gain just to drop it back down would have made no sense. I'd
Yeah.
rather reset the play and try again, even though it was successful. But if it's gonna keep happening, I was like, why not?
Yep.
So, and that actually worked out on this play. So I was able to catch those points. So that was a good day. And then this one was another, I think, end of the day. I caught this one because the 10 SMA, the divergence on the RSI right here. I saw the fair value gap. I didn't want to get in here because I wasn't sure if this drop, if it was going to drop below. Trend line held, but once it got above the 10 SMA, and then this right here, because of this actual candle from this green fair value gap, I decided to get in. And right when once I got in, actually it just decided to pop. And it just started holding right above from the 50 and then just continued up. And I was able to close it at the 161.
And that's what I mean. When you guys start seeing the price action base, pay attention to the RSI. It signals. It'll let you be like, okay, even though it's flat, it's either gonna continue going lower, lower highs like this, or it's gonna do higher lows like this, like it did. Even though it's flat, right? So you know it's pops coming. And another thing that kind of caught my eye was this BPR right here. And I usually when there's a BPR that hasn't came close. And those who don't know, BPR is a balanced price range. So it's when there's a red fair value gap overlap with the green fair value gap. And usually price action goes to the middle of both gaps. And then you gotta wait for price action to either go above it, close above it like this one, and then get in to continue going up to the next fair value gap, or vice versa. But I've noticed, watch, pay attention. Like if you see how there's a BPR right here, and there's no price action that ever touched it other than right here. Then that level, the middle of the BPR, right there is your over under. Or you can use these dojis, which is the same thing. That, and then you got the RSI, like you said. I mean, shit, you don't need me to break this down for you. You're already killing it, bud.
No, I break it down because, like I said, a lot of things that I'm hearing now when you say pay attention, it it just strikes a light bulb. So it does help. So,
Yeah.
like I told you, don't stop.
Especially,
I'm
yeah,
serious. No, like today was actually helpful too, you know? Like now I'm gonna look at falling wedges and stuff like that. So it does help out.
Yep.
And I think today was good. Today was a good day. I didn't get a chance to like actually, write down my place because of Friday.
Yeah.
But I was able to catch this one. Um, this was off the morning, so off the drop. Like I said, when I see a whole bunch of stacks of green fair value gaps, I'm gonna wait for confirmation because I don't want it to just break down on me. So I
Yeah.
waited for the pop, got in right here because now it's back to that level where I do from that doji for I think this doji has been 3 days ago. Well, no, from last week. So I still used it as like a support line to get in for confirmation,
Yeah.
especially with this BPR from right here. So I said, okay, I'm gonna wait right here. This will be the top of the fair value gap will be the stop loss.
Yep.
So I put the trade in and it just started going and going. So right when I was looking to actually get up on top of the red fair value gap, but the 666 was there, so that was going to be my target. And target got hit, and that was literally a 70 points move, but basically on that play.
Yeah. Straight home run on that one.
And that was the first trade for the day, and that was it. Oh, I did take this one for the scalp, but
that
then that was it for the rest of the day.
those are the best, man. Where you hit your daily goal in one or two trades and you call it a day. Fucking shut it down and go on about your business. Um, Kevin, I think has a question. He said, "Where do I find the fair value gap?" Uh, it's in the futures chat in the elites chat, and it's pinned. It's pinned to the top. So just go to the futures chat and then click on the pin, and you'll see it's the second one down from the top, or it's right after Lasagna Cat's rules. Um, and then you import it into NinjaTrader. If you have NinjaTrader, um, you can use it. It's only for NinjaTrader. It's not for TOS. So if you
Actually, they
don't,
do have for TOS.
oh, they do.
Yeah, but I think Connor posted it one time. There's a link for TOS where you can actually put a fair value gap on.
Okay, well, I'll find that fair value gap if you don't have NinjaTrader, Kevin. Other than that, I know that there's a Lux Algo one that Brandon uses on TradingView. But this is the one for NinjaTrader. And if you need help with that, just shoot me a message. I'll walk you through.
And that was it.
Cool, man. Well, keep what I want you to come up with next is just hit your goal because I know I feel that your confidence is high, but let's gauge it. Let's find a way to measure your confidence, right? The way to measure your confidence is your hit your daily goal every day for the next week or two.
Okay.
That's what you want to do. You want to. I know that some people are like, no, you shouldn't have a daily goal because it's gonna put more pressure on you or whatever the case is. If you start to feel that way, then take it off, right? Because you want to trade this like a little system, right? Like when you go to work, you want to know that you're gonna have, you either salary or you're hourly, right? And if you're an hourly job, you want to know that you're gonna have 40 hours of work because you want to
Right.
feed your kids. Same thing with this. You want to know, hey, I'm hitting my daily goal or not. But not only that, if you start to you'll start to notice that you're gonna get confidence more because you're hitting your daily goal on one or two trades. You're like, oh shit, I hit it on, like today. You said you hit it on one trade and you're done. You're done for the day. Uh, but make it reasonable at first, and you're gonna slowly push up. Because this is what set me apart is, or not set me apart, but at least set me up is like, okay, if I could hit my daily goal for a whole week, I'm not gonna, if I could hit my daily goal for a whole week, the next week I can add one more contract. You're gonna put yourself in a situation where you're not over leveraging yourself, right? Because you don't wanna start a prop from combine and you're like, fuck, I can pass this shit in one day. Let me fucking go 6 contracts deep. Next thing you know, you blow it up.
Yeah.
So the way you want to do it is, okay, I'm gonna start with 2 contracts. That's what I recommend. One if you want to, but two is my recommended suggestion is all right, let's create a daily goal that seems reasonable, that's not too high, and is not too low. So you're kind of pushing yourself. So then we set a daily goal. The way that I did it when I first started doing this method was okay. When I first started with MES, I started out at a monthly goal. So my monthly goal was okay. I want $600 for the month. Just just think of it as fun money, right? I want $600 and then divide that by 4 because we have 4 weeks, and then divide that by 5, and that gives you your daily goal. And then once you figure out your daily goal, figure out your target per you can figure out your target price or your target goal per trade. So let's say it's $600 every week. You want 150, so that means for 5 days straight, you wanna hit $30. So $30 is your goal, and then $30 with one MES contract, then that would make it like $12.50 or whatever the case is. Um, or no, it's less than that. But you got 4 trades. You should not be trading more than 4 trades. This goes to you too, Luna. Do not trade more than 4 trades. You should be hitting your goal by the third trade. The fourth trade is like, oh, I see a grade A setup. Like I used to tell Easy, do not overtrade. Once you hit your goal, do not trade your fourth trade just because you have 4 trades. Don't go trade your B setup or go trade any kind of setup that you think you might have. Only trade your A setup because if not, you're gonna end up giving money back. And then that's gonna mess with your psychology or your confidence going into the next day. You're like, fuck, I ended up with the one red trade. You want to try it in with the green trade and hitting your daily goal. But I highly recommend that you don't trade more than 4 trades. You shouldn't need more than 4 trades.
I'm barely getting those cross up with the A setup on multiple occasions because I'm not at the screen all the time,
Mhm.
especially when I'm busy.
Yeah.
So sometimes when you get those trades, it's golden, and yeah, you just can't get them all the time. Those crosses of where the opportunity you can actually take it up or down.
Yeah, dude, that's the best way. Dell, are you done trading or are you done recapping? We're gonna go on to
Yeah,
Luna.
yeah, I'm sorry. Yeah, that was it basically.
Okay.
That was today's trade. And like I said, that one trade um basically said it all. I
Yeah.
was done for the day. There was no reason to keep going.
Yeah, there's no reason to end the fucking week on a green note, end the day on a green trade, and start the weekend, on a freaking green freaking week. Uh, it sets you up to stay consistent is what it sets you up for. You don't want to fucking You know, Brandon always said $1,000 a day to keep the job away. You know what I'm saying? Like that was my motto. And I slowly did okay. I started off with 600 bucks, something. I mean, I started off with a $600 account, right? So 600 bucks, double my account in 1 month on MES. Like that was amazing. You guys seen when I was posting $12 wins, $25 wins on a daily basis, but those base hits added up. And that wasn't just, hey, I won 25 bucks. It's like I'm getting this consistency shit down. Look at Brandon. His shit rubs off on all of us, whether we think so or not. If you don't have a system or a set of rules, then of course you're not going to be consistent because you're just, hey, oh, Brandon said go long. I'm getting in long. No, you fucking have to do your own analysis still. He's just giving you those levels. Price action in between those price levels, price action can fucking go up and down 10 times, right? And he can be right and I can be right. One of those 10 times, we're both going to be right. But what I want you guys to start developing is a system for your strategy, whether it's the ICT, fair value gap, whether it's the 50-10 moving average, if it's the fair value gap, whether it's BPR, whether it's the anchor VWAP, whether it's a standard dev system. You need to create a system around your strategy. Treat it like a system. It's your standard operating procedures. What are your standard operating procedures so you could get into a trade? Do you have to you have to write down everything that you want to see before you get into a trade.
Huh?
If you don't get into a trade,
Uh-huh.
If like shit hits the
if you
fan
don't
with
get
us,
into a trade, if you don't get into a trade, then that's and it meets all your criteria, then that's something you have to get over. That's a psychological trick. Either you've been burned a lot of times or you've blown up an account. You have to get over the fact. What you got to think of is okay, I put all the chips or I put all the odds in my favor. This is my opportune time to get in. And now, if you're breaking some of your rules and you normally get like a 90, 85, between 75 and 90% accuracy rate, where 90, between 75% and 90% of the time it's going in your favor, then you know that if you break the rules, that's going to lower that, right? It's going to lower it to 60 or 50%. But guess what? You can be wrong 50% of the time and still be profitable as long as you keep your reds little and your greens let them run. But definitely, like I recommend to everybody, the way that it helped me build my confidence and my consistency is have a daily goal. It's not a fucking, hey, I didn't hit my daily goal. If you don't hit your daily goal and you still have 3 green trades, that I'm still proud of that. I don't give a fuck. Because there'll be some days where, let's say you don't hit your daily goal today, but the next day you might surpass your daily goal, right? So you have to pick and choose your wins and your losses. But if you hit, first I started out, okay, if I can hit out of 25 trades or 20 trades that I take the whole week, if I can take between 15 to 20 green trades, then that's a fucking win for me. And yeah, I might have not hit my daily goal every day, but I hit my weekly goal. Okay, next week I'll add one more contract. I'm not gonna over leverage myself. Next week I add one more contract, and guess what? And now I'm hitting my daily goal in fucking 2 trades instead of 3 trades. So then you keep doing the same thing. You repeat and wash, rinse and repeat, rinse and repeat. You go fucking hit your daily goal for another 15 green trades out of 20. Okay, I can bump up one more contract. Next thing you know, you're hitting your daily goal in 1 or 2 trades consistently. And then if you want fucking, once you do that, then you increase. So once I went from $600 a month, my next goal was $1,200. $1,200. That was my next goal. And then when you repeat, rinse and repeat again, start all over, scale down, So once you hit 1,200, you either scale back down where you're not over leveraging, because you got to think you're on house money now. For a whole week, you had green. So now you're on house money. And now you can upgrade, you can increase the contracts, and you're still on house money. And not only that, but you have the confidence. That confidence clears your head, clears your eyes, that clears the chart up for you so you can see price action a lot better and make smart decisions. But enough of me ranting. Luna, if you want to share your screen, share a couple of trades that you have.
Don't have good notes this time. As I said, I wasn't able to do lots of trades, and very busy this week. Actually, I even have an offer right now that I have to deal with.
Okay, no worries. If you don't have no
Yeah,
trades, is there any questions that you had? Any
I do.
any issues you may have ran into this week with the strategy you're using?
No, actually, it seems it worked fine when I got those couple of trades. It worked fine. But I have a question for you though. On February 1st, you guys took a long, and
Yesterday?
yeah, and I was looking at it. I said, like, there was no cross up. RSI was below 50. Volume sell beat. Like the MACD was low, and ready to cross. Like why did you take it? That's why did you anticipate it's going long? And I think it did go long. So that was the question.
Let me see if I have a screenshot. You said the first, right?
The first, yeah. And this was, if you want, I can share my screen. I took a screenshot of it.
Oh yeah, go for it.
Okay.
Might take me a little bit to find it.
Hold on. Let's share screen. Which one was it? Yeah, this screen.
Go ahead and share when you want.
There you go. You see it?
Yep. What time was that?
This was at 10,
So 7 my time, right?
7 your time.
On the first? Is that 1 minute chart?
1 minute chart.
Oh, that's yes.
That was NQ.
No, no, the one that I had up was. You
Oh,
said
okay, I
at
see what he's talking about. I see it on my chart.
what time?
It's at 10 o'clock on the first, at NQ. This is, well, that time, yeah.
The only reason why I had taken it was I was. That's a 1 minute. I have the 1 minute. Oh, that's ES. Sorry.
Like this is,
I keep looking at ES for some reason.
I took just basically
The fuck?
a shot of the message just to see what you're like. You said it was gonna go long, and just at that time I just didn't understand why.
Trying to find the screenshot. Hold on one sec. That's weird.
For me, the only reason I can see that, even though I didn't take it, I took the play after, it's because I see a big red fair value gap. So probably from the day prior,
At
there was
7 your time?
no, at 10
That's
our time.
7
So
your
it'd probably
time.
be, yeah.
That was 7 your time, February 1st.
Yeah, I must have not traded that. Did I? If I did,
Well,
I didn't take a screenshot.
well, you called it, and it worked out, and just was wondering why though that you called it this. I just didn't
Dell, do you
understand.
have a screenshot on that too?
Yeah, I do actually. It was in one of my plays on the bounce back off the test of the big green. Yeah, I have it. You want me to share my screen to put it up?
Yeah, let me see. Because I want to see the bigger picture. Because I'm pretty sure there was structure over here somewhere. Because the way that I remember seeing it was a falling wedge breakout. See how there's a falling wedge?
Mm-hmm.
And I seen this doji right here. And I remember there being like a big up over here. There was like a buyer candle right here that had a wick.
Okay.
Uh, but I'm trying to pull it up on my
I have
screen.
it up on my screen right here. He's talking about this type, right? This right here.
Yes. Yes, that's the one.
So what time was that? Thank you. I'm not fucking take a picture of that. And that was yesterday, right? Because today's the second.
Yesterday. Yeah, yesterday, February 1st.
Almost there. Hold on, guys. Sorry. I want to give you the. Yep. It's exactly what. Here, I'll bring it up on mine. Shoot. So see this big wick right here?
Okay.
Oh no, that was the wick you were talking about, huh?
It
No,
was
that is
10.
it.
Yeah, that is the one.
That is it. That
10
is it.
o'clock.
Because there's 7 o'clock your time.
Yeah, 7 o'clock.
Yeah.
That's your time. Yeah.
Yeah, but I
Yeah.
had called out in the play. I remember now. I had called out in the play that it can come down to this level. Worst case, it was gonna come down to this level down here. Did I lose you guys?
No, I'm here.
No,
Yeah,
I got
wait.
you. It said connection loss, but anyways, I had put a fishing order out on this area, and then the worst case, I put out a fishing order on this Fair Valley Gap right here,
Okay.
and that's why I had taken it, because I had seen this big move right here. The bigger move, I was like, okay, it might bounce right there, and it did. It bounced up a little bit, and then it flushed. I was like, oh shit, it might flush, and then I was like, okay, well, worst case, it's gonna come down to this Fair Valley Gap, because it was a big move right there. So I had a fishing order out there too. So I added here and then I added here. Because the day before I had asked Brandon, like, okay, well then how do you average down? Right? I had asked him that. Like, and he said, well, he usually has like two areas. He has structure or he has a moving average, and let's say there's an anchor VWAP down here, right? So let's say he had a moving average down here or up here, and he had a anchor VWAP down here. So he'll add down here. And if it breaks that level and holds that level, then he would stop out. So I'm
Okay.
trying to implement that, but it was solely because there was this Fair Valley Gap. It was a dump in the morning, and I was like, okay, well, let me see if there's anything, because I didn't see anything here. I thought this was gonna catch it. It caused a little pop, but then it went down. I was like, this big red candle started going down. And I was like, well, there's no structure, but there's a Fair Valley Gap. There has to be structure. I seen the two Fair Valley Gaps. I was like, okay. So I went back, and this is where I got my levels. This little consolidation zone, because I'm looking for big moves. Where are there big moves? You know, this is a pretty big move right here from here all the way over there. So I knew buyers were right here.
Mhm.
You know, that's the area where buyers might come in because of this big move. Worst
Oh, I
case,
see.
there's another big move over here, right? Because there's these little moves right here, but hardly nothing happens on those big moves, on these moves anywhere. See?
Yeah.
But when there's big move right here, like right here where this big move happened,
But there's chance there's another one that comes.
yeah, right here, it could come down to that level. Like this area, it could come down to this level. It didn't. It caught this level, but it caught the 50 SMA right there.
Mhm.
So just keep looking back, okay? Right here, it could have busted through, but still, you know, because of this, right? Because of this move, this pop happened. Because there was a lot of buyers in this area because you see this big green candle right here.
Okay.
Wherever you see a big green candle or a big red candle, remember when I said in the beginning of the meeting that when you see a big green candle or a big red candle, there's going to be sellers there or buyers or whatever the case is. Same like
Yeah.
up here with the bigger the wick, the more sellers that will be there.
Okay.
Um, it was all because of this area right here is where I got in. And then I got in because remember I got in like right here. I didn't get in. I got in right here and I got in down here. But once I seen price action go above these two dojis, because there was a volume profile, and I call out the plays, I said, hey, if price action holds this level, we're gonna squeeze up.
Mhm.
And then I started seeing the cross. I seen the MACD cross, and then I started seeing this, and I was like, okay, the next candle it should squeeze up.
Okay.
And that's when you see it because there's a lot of liquidity in this area right here.
Yeah. Okay.
So right here, buyers got filled and started coming in and squeezing out the sellers.
Awesome. Okay.
But
So
yeah,
you're
they
looking at
always
the
look
way
left.
before. Yeah. Yeah.
Yeah,
Makes
like
sense.
the only reason why I looked back was okay, I didn't see nothing here, right? Like there was no, because it was like this. I couldn't see where is it at? Oops. It was like that. And I was like, huh, it's not there, not there. But I seen these two fair value at. So I was like, okay, let me squish up the price action. And I thought it was gonna bounce on this top fair value gap because of this move right here. I was like, oh shit, it might squeeze up right there. But it ended up coming all the way down there, and my stop was below this fair value gap. I was like, well, worst case is I'll get down here. Brandon averages down that way. So I was like, okay, I'll add 5 here. I added 5 at the top of this fair value gap and added another 5 right here. I had to buy the bid because it only filled a couple of them. So I had to move it up and it filled a little bit more.
Okay. And where would you put your stop over there once you're in?
If I'm in right here,
Yeah.
it depends. Like I
I mean,
usually
sorry,
put,
your target. Sorry, not your stop. Your stop
oh,
will
my
be below
target.
yeah.
My target was the 666.
Okay. All right.
Well,
Gotcha.
I won't freaking. Hold on. So my first target would be the 50 SMA right here,
Mhm.
because it lines up with these dojis right here. So my first
Okay.
target would have been the 50 SMA, left some to ride to the 666, maybe even the 200.
Okay.
But always take it in steps. If you get in down here and it smashes through the 10, your target should be the next moving average up or structure to the left.
Okay. But this is if you take in multiple contracts. In my case, I
Yeah.
take 2. So I'll just
Yeah,
have
you
one
take two, lock one in right here at the 50 SMA,
and the other one
let
at
one
60.
ride. let one ride to the 666. You could even put the fishing order out, put it out here. Um, oops. Put it right there, and then put your stop loss, attach it to the 10 SMA. Remember how I taught you?
Yeah. What do you mean by put a fishing order there? For what?
Like what I usually do is I'll put a fishing order out once it breaks. Once it hits my first target, I put a fishing order out for the next potential target, and that means a fishing order. That means I put a limit order out already to my second target, and I usually attach limit a stop limit to the 10 SMA.
Oh, you take it in the same direction, you mean?
Yeah.
Oh, I see. Okay.
So like say I entered right here, right? Because I had entered right here. Do I have a screenshot? No, no screenshot maybe.
It's okay. I got it, what you're saying. So just continue. So you basically, if you entered there, you have your first target.
Yeah, so if I entered here,
Yeah. Right.
if I entered here, right? Somewhere in this area,
Target at 50 SMA.
target at 50. Once my target is hit right there,
Mhm.
I put a fishing order. I hit Control Z. I hit Control Z, and then you'll see a little green box right here. It'll
Okay.
say OC. Like, see how the little, oops, the heck? Is this a screenshot? It is a screenshot, but I don't know. Oh, see that little green box?
Yeah. What is that?
So it's called the OCO, right? So I hit that little green box. I put a fishing order out. I put a fishing order out over here, buy limit. Put one
Okay.
right there, and then I put another one, and then I put another one down here at the 10 SMA. I put a stop limit.
Mm.
But first, you need to do Control Z so you get that little green box. Because if you don't do that Control Z before you put your orders out, then it won't close it out if one hits.
Oh.
Because
Okay.
what it does is if it hits the stop limit, it'll cancel the buy order. You know, your fishing order out because you have one. So you have one order right here, right? And then
Mm.
you'll have one attached to the 10 down here somewhere, even though you
Okay.
got in down here. So
Okay.
if it hits your stop right here, you're still green, you're still locked in green, and it'll cancel this one. It'll cancel it out, and your trade will be over. If you forget to hit this little green, the Control Z, and see this little green box, or if you put your orders in before you put that green box in, it'll close one order. So let's say you got stopped right here, right? And it closes it. It won't cancel this one. So you'll buy, no, you'll sell another. So you'll be in short. And look, it'll go against you. And then
Oh.
you might, if you're at the chart, you might be able to get out green here. Or if you wait long enough, you might be able to get green. But I've been in the situation where I forgot to do that, or if I wasn't using the ATM strategy. If I wasn't, if I wasn't using the ATM strategy, I would go to sleep and they wouldn't cancel one order and they would fucking almost blow up my account, or I would end up red in the morning. But definitely, like, usually most of the time, once I call out my first target, or once my first target is filled, I'm already putting out another potential target. So I'm either looking left. So if it hits my target here, my next target's up here, or the 666, 200, whatever. Like usually what I like to do is the 200 moving average lines up with this kind of area. So I'll just like average it in between here somewhere. See how this area kind of lined up with the 666 or the 50? Then you would line up there. Always look to your left and use those as your targets because there's going to be resistance, especially if they're big candles. big candles, you know there might be sellers or buyers there to you know, try to stop you from hitting your next target. But hopefully that answers your questions.
Yeah, it does.
Any other questions? Any other recaps? Cat, you good?
Yeah, I'm good. I'm just chilling, just taking notes.
So I'll stop the recording there.